Welcome back to another episode. Today we're going to take a quick look at UiPath. They just reported earnings. There's so much happening in the market right now. It was a very kind of red day for the overall growth market, so that could be a reason UiPath stock dropped a nice amount today. I do want to say their earnings looked strong in my opinion. I am not a shareholder, but on today's episode what I want to do is take a quick look at their earnings and just give my overall thoughts. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment where I have 10 free stock ideas, and I also have this free newsletter which I send out every week of all the stocks that I've been covering for this quarter. Again, it's completely free. You should find the pinned comment down below. Also my Discord channel. Alright, so let's just jump into it. Quarter 3 ARR, so this is annual renewal rate, was about $818 million. That was up 58% year over year, and it was also up 12.5% quarter over quarter. This is super strong, right? This is most software companies are kind of looking at them at that annualized run rate instead of actual revenue itself on a quarterly basis, and that, like I mentioned, up strong digits. Just this quarter alone, they added $92 million in annualized renewable run rate. And I think that is pretty impressive. The great thing about UiPath, right? If you're not familiar, they kind of have these software robots that kind of do tasks. So even if they have one customer, maybe a customer at first might only try one robot, might only try two robots, but as they continue to see the benefits of these this RPA, they can start grabbing more robots, and the more robots they get, the more revenue kind of UiPath collects. Another things that I want to mention are global customers. We can see global customers right now were about 9,630. This was up about 23% year over year, and it was also up about 5.8% quarter over quarter. So we can see this total growth in total customers. Not only that, I like to see customer count going up, but I also like to see customer count from big active, the ones that pay big money, go up, and that's what's happening. Customers that now pay more than pay at least $100,000 in annualized recurring renewal rate, or ARR. I'm just gonna say ARR. Is about 1,363. This is up about 20. This is up year over year. We can see same time last year was about 900. This is also up quarter over quarter. Then they also have a stronger customer base, which they call the C-suite, and these are customers with at least $1 million in ARR. And that jumped a nice amount, 135 now, up from 74 a year ago, and that is also up quarter over quarter. Finally, the most important thing I think was the guidance that they gave. They did increase their guidance for quarter 4. Now they expect ARR for the full year to be somewhere around 902 million, and we can probably take a quick look at that chart. About 902 million. This is up just from previous quarter guidance. Previous quarter they expected somewhere between 888 million. So overall, I think revenue earnings were super strong. Now I want to take a quick look at some of the highlights this company is kind of bringing up. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. And the first thing they showcase it in their presentation, there is strong industry tailwinds right now. As there is an increase in labor shortage, companies are kind of moving into automation. So the overall industry, the automation market, can see some growth in the upcoming years. And some of those automations can come in forms of software tasks where UiPath kind of hits, right? That's the main market it hits. Obviously, these automation talks are also talking about kind of more labor intensive automation, but I do want to say in the software market, there can also be some form of shortage that UiPath can help out. The other thing I want to take a quick look at is when UiPath, I want to say the RPA market, it's strong in big companies, but this is something I feel like it's still not widely known in the small to medium businesses. Right, I'm pretty sure people are still just using people to do a lot of these tedious tasks. But the best way to do that is to educate more developers into becoming familiar with UiPath and the products that they do. And UiPath has UiPath Academy, which if you want to learn the skills of the future, they kind of have free training. You can actually become you can get certified, I believe, here. And I think that is super strong right now. We can take a quick look at in the past 2 years, they have trained over 245,000 students in 63 countries, and they are in more than 1,000 higher education institutions. And if they want to keep the lead in this market, I believe educating the next developers is the best move. The second thing that I really do like about them is their technical partnerships. In this most recent quarter, they did announce some big players in this kind of partnership. Companies like Alteryx, like CrowdStrike, like Click, like Snowflake. And when big companies that are growing that are in a growing market right now are kind of partnering up with you in some technical aspect, I think it shows strong growth. So the one I found pretty exciting was CrowdStrike. So CrowdStrike, they actually have an awesome blog that explains how CrowdStrike and UiPath kind of work together for this awesome integration. So they mentioned, consider a case in which a robot is programmed to visit a specific URL and download a log file at the same time every day, right? That is the process of these RPA robots to do a task, a tedious task every single day, every single time frame. But now imagine the consequence if that URL has become compromised and the automation downloads a malicious file instead of the usual log file. In this scenario, the robot presents a similar threat as an unintentionally compromised employee or insider threat. To help protect against these types of situations, industry leaders CrowdStrike and UiPath are joining together to extend endpoint security to robotic process automation. And I think this is pretty impressive, right? It's not, UiPath has really focused to build safety and security into their robots. It's not the process of the robots getting hacked, but the process of these tasks that these robots are doing could get kind of attacked just like any other site. Like if a human was doing it, it would be the same thing. And I think these kind of partnerships are going to continue to make UiPath a leader in this market. And kind of focusing on that, this most recent earnings, UiPath won numerous awards. They are definitely a leader in the market. You can see some of the awards that they won on their earnings presentations. And if you kind of if you go to Google and put top RPA companies right now, UiPath is the number one compared to all the other players. And we're going to talk a little bit about some of the bearish cases for UiPath in a bit. Actually, we're actually doing it right now. So some things to note. Valuation might be a bit high, right? The price right now, its market cap of this company is about $24 billion. We saw the annual recurring renewal rate would be about $902 million for this upcoming year. So that's about a 26 price to yearly revenue run rate. So that's a little bit high for some investors, something to keep in mind of. The second thing is competition, right? Competition is still, even though UiPath seems to be a leader in this market, there's always competition and they can come right behind you and start taking some market share. The other thing is they are still burning cash flow from operations. I believe it's about a 25 million this quarter, something around 25 to 26 million this quarter. They do have a lot of cash, they do have a nice amount of cash position and no debt, so that looks pretty good. Now the other thing is technicals. I really like technicals right now for UiPath. I mean, right now the stock is down about 44% from its all-time highs, so obviously it's going to look attractive, but this is a price point around $47 where I personally enjoy. If we take a quick look, another thing is numerous analysts have decreased the price targets after earnings. This one decreased it to $50 from $65. This one decreased it to $59 from $64, and this one decreased it to $75 from $82. All these three prices are higher than where the stock price is at right now, but still kind of seeing these bearish sentiments from analysts could cause more bearish sell-off to some extent. I could really care less what analysts say, but I know some investors like to look at it. All right, so now my final thoughts. I really did like their earnings. This is not a company I have in my portfolio, but if it was to enter, it would enter the tier 2 market. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.